Hey! It is Jobs Week, so get ready for a flurry of data here this week. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to come to you every Thursday at 3 p.m. and kind of weed out some of the noise we're hearing in the markets, bring to you the stuff that really matters, especially in a week like this where it is information overload. Coming up is the 4th of July weekend, so hopefully you guys are all excited. You have some plans to relax and enjoy it. I think it's supposed to be like mid 80s all weekend and be really nice. So I'm hoping everybody's able to get out and have some fun, especially after the heat spell we've had here recently. As far as this week goes, again, the jobs is the biggest thing, but I want to start by talking a little bit about what happened last week. So on Friday, we had a few pretty big numbers come out. First was personal income. Personal income was actually down 2%. And then we also had consumer spending, which was completely flat. So I might pose this question to you to ask, what do you think the impact of less income and slower spending may be on the economy? As you might imagine, that's not typically going to be a catalyst for more growth. And I'm not saying this is something to be concerned about yet, but it is something to really pay attention to, because as all of the stimulus and all the money that's been kind of flooding the markets here over the past year start to work their way through, these are the numbers that are going to start becoming really, really important, and the numbers that have really drove everything up to this point. So really pay attention to this stuff. Obviously, if we are making less and spending less, unfortunately, that means the economy is doing less as well. So pay attention to that piece. Jobs were big this week. So yesterday, we had the ADP employment report come out. We had 692,000 jobs added versus expectations were somewhere in the mid 500s. So this was a great surprise, huge surprise, especially after last month where it wasn't very exciting. But we saw the markets do almost nothing. I mean, this whole week has just been flat. Even the week before has not been a lot of movement. And maybe I'll share some thoughts here in a minute on that. But on top of that, we also had initial jobless claims come out this morning, at 364,000, which was, again, a great improvement. We've been kind of flirting with that 400,000 level and went over it actually a couple weeks. And here we are kind of heading back in the right direction, hopefully. So, I'm looking at this and just going like, what are we waiting for? Markets have done absolutely nothing. Are we waiting for tomorrow where we have non-farm payrolls? It's like the markets have kind of gotten to this edge of this cliff, and they keep looking over the ledge to see if there's some sort of opportunity or, who knows, misfortune ahead. And I think that this is really what happens when we have these large runs and the market starts to look for kind of like a crux to really keep pushing or look at, a potential pullback. So I don't know that what we're looking for is tomorrow. It's hard to say, but clearly we're looking for something at this point. And whatever that might be, kind of hang on one way or the other, because that might really propel up or down this next kind of leg from here. So, I guess, the question to ask is, what do you think's coming? Is it going to be good news? Is it going to be bad news, especially with the number tomorrow? The non-farm payroll, again, is kind of like the big number we've all been watching here over the past 6 months or so, which is a big indicator of the jobs market. So that'll be really interesting. On top of that, we've got a lot of data coming out next week. And so, that's really the question. And then, what I would say is maybe use those thoughts that you have to either shape some of your strategies or kind of prepare for any risk or opportunity that you might see ahead without losing sight of the long term. Don't lose sight of the long term. So as far as next week's a really short day. We've actually got, so it's 4th of July weekend, and on Monday, the markets are closed in observation of the 4th. So it'll be a short week. We've got 4 days of trading, not trading. And then ahead tomorrow, before we get into the 4th of July weekend, we've still got a lot tomorrow. So we've got non-farm payrolls and unemployment rate. And I'd love to hear what you think the non-farm payroll number will be. Again, this is a big thing to watch. And so it'll be very interesting to see what comes out tomorrow. And then next week, we actually have the FOMC minutes on Wednesday, the Fed minutes coming out on Wednesday. So as always, this is what seems to drive the market. Maybe this is what we're waiting for, although a lot of this has already been talked about. So pay attention next week. And then we'll kind of jump into our question of the week here this week as well. And a great question came up about the old the old myth of sell in May, go away. I don't know if you've ever heard that. It's very catchy, that's for sure. Probably won't forget it now. But basically, there's this old adage out there that you should sell in May from the stock market and then come back in November. The myth basically states that May through November, nothing good happens in the markets, and the other periods are really when we see all the growth. But be cautious of this. We're obviously in July already, so hopefully nobody's done this already. But the truth is this doesn't really apply. Look at the last 4 or 5 years or so, especially, and those periods have all been really, really strong periods in the market. So you hear this all the time, sell in May, go away. I think it's probably just because it's so dang catchy, but just be cautious of this. Where I do think a lot of this saying comes from is not just the market returns, but volatility in the summer. So a lot of times what we'll see is basically after Memorial Weekend through Labor Day, the volatility, the volume, I should say, excuse me, in the summer really slows down. There's not as much trading. I can't say that obviously always, because a big event will certainly get that to spike very quickly. But generally speaking, there's not as much trading in the summer as there are in the other months. Probably people on vacation, like just a little slower period in general for the US. So I think that's where a lot of that comes from. But again, don't lose sight of the long term. This has not worked recently. So, any sort of like general strategy like this that is kind of said to be the tried and true, just be cautious. It's, if it were that easy, everybody would do it and it would be no problem, right? So that's it for this week. I hope you guys have a great 4th of July this weekend. Of course, if you have any questions for us, reach out, and if we end up using your question, we'd be happy to send you a copy on us to kind of thank you for the great thoughts here in our weekly updates. 4th of July again is this weekend. It's supposed to be mid-80s. I think I'm going to try and do a little barbecue myself. So if you have any barbecue ideas, send those my way too. Love to hear what you guys are cooking up here this weekend and see if I can get any good ideas. Thanks for joining us. We'll see you next Thursday, same place at 3 p.m.